Good morning from Chicago traders. It is 8 a.m. Chicago time on Tuesday, the 10th of March, 2015. Derivatives trading involves substantial risk of loss and is not suitable for all investors. My personal opinions, market data, and recommendations subject to change without notice. Past performance is not indicative of future results. Be aware that ECB's Draghi is releasing comments as we speak. Also, at this time, we have ECB's Mersch in Luxembourg giving a speech in Paris regarding monetary policy. So, if you're in the euro or European treasuries, you might see reactions there. The overnight news is quite limited. China's disinflation eased in February following recent monetary policy moves. February CPI came out year on year at 1.4% versus 1.0 expected. That's good news. The US dollar continues its surge. The US dollar continued to hit multi-year highs against the euro, yen, and other major currencies. Commodity and emerging markets are being weighed down by the US dollars. They're priced in dollar terms. European yields continue to probe record lows. ECB QE bond buying continues after yesterday's start. Fed's Fisher released comments yesterday saying that the Fed may have to raise rates sharply after liftoff, if liftoff is postponed. In other words, the Fed is likely to play catch up. Just now, White House economic advisor Furman said that the U.S. dollar strength is a bit of a headwind for growth. There was a comment by the Fed this morning also to say that any currency intervention would be in the hands of a U.S. Treasury, not with the Fed. And then for those who keep track, the S&P fair value this morning is at negative 1.1. In other words, the cash is trading higher by 1.1 points to the futures. Looking ahead, at 9 o'clock Central, half hour after the open, we have U.S. January wholesale inventories expecting negative 0.1%. Wholesale trade, negative 0.5%. Also at 9 o'clock, we have January JOLTS job openings. 5.039 million is expected. The JOLTS number just tells us how many jobs are actually being publicly advertised that need filling. At 10:30, we have the Treasury to sell 4-week bills. At noon, at 11 o'clock, we have this new number, or a number that's been around but not talked about. 11 o'clock, Department of Energy short-term crude outlook. At 11 o'clock, also, we have the U.S. crop report, also known as the USDA World Agricultural Supply and Demand Estimates, the WASDE. And then at noon, we have Treasury auction for $24 billion in 3-year notes. At 1 o'clock Central, we have Bank of England's Fisher. At 1:30, we have Bank of England's McCafferty. And then we have at 3:30, which is 15 minutes after the U.S. pit closes in the equity indices, we have weekly API oil inventories. So quite a few items on the calendar today. Nothing too substantive. And then there's a fair amount of news flow coming in between among these central bank speakers. Let's switch gears and look at what we have done. I've had to take down yesterday's video simply because of the my data was not correct given the hour difference, the change in time for daylight saving. On Sunday, it caused an hour shift, and so a lot of my data was wrong, and I didn't want to have a misleading video out there. So let's catch up today. Yesterday, what I talked about, because of Friday's action, what I talked about yesterday is given that Friday was a trend down day, given that the point of control was at the low end of the day. Also, Friday did exceed its double IB, so officially it is a trend day down. and all of these factors, as long as the market stayed below this 84 area, we're likely to see another leg down. Now, it did not behave as expected. My primary hypothesis is that it would likely push higher on the open. I believe the overnight high was 74.50. Expected to push through 74.50 and then a rotation down looking for 2069 quarter and then 2065.50. And then I was looking for, at the time, I thought it was 63.50, but it's actually 62 to close this point of control. I do expect a lower low. I did expect a lower low on Friday because this is an impulsive move and it's likely to draw people in. And so the low in this situation would be vulnerable. That did not happen. We rotated up to 75, which was as expected, but then the rotation down to 70 quarter was not very strong, and the market just sat sideways and then started to drift up into the afternoon, mostly balanced trading. I feel like the value area, although bizarre looking, it's still fairly valid. It's not as Gaussian as we'd like. There's kind of a notch out in the middle of it, right at the IB high. But overall, this is a balanced trade. And the market did push through and give us an impulsive move up and did not follow through. So looking at what has happened since, so what we have here is that the participants yesterday did not feel the need to continue lower, to explore lower. There was some buying pressure there. Overall, yesterday's volume was fairly low versus the norm. And the range was also fairly low as well. Now, when we look at what happened overnight, here we have this open. It continues its drift lower. Overnight, it tests the point of control at 75 quarter, fairly early at 8 o'clock Central, sits sideways, breaks through, tests it from below right here, and then we have this trend down as the dollar gains strength overnight. To push to 2055.50. The key level below that 62, 63 half or 63 half that I mentioned yesterday, which should have been 62, the key level below is 2060. If you recall, when we were in that October to February balance zone, 2060, 2060.50 was a key number in the area. It was a long time microcomposite point of control. And this is what I had target. This is what I talked about yesterday to target based on Friday's action. And like I said, yesterday we ended up having a deeper pullback than expected. But today it's actually done what it's expected to do. We did take out Friday's low at 65.50 overnight. We want to see confirmation of that on the open during regular trading hours, RTH. And we have a trend type profile with the market having found buyers and is balancing down here. Notice the point of control miraculously at that key 2060 figure. That's not a coincidence. It's just the way the auction works. And so as we map out what we have done here, we have two distinct and key areas to work with. The first area, again, goes back to October 31st. This is the massive dotted profile that I've shown many, many times in prior sessions. And what we did was we traded from prong to prong to prong. You can see here the very, very deep acceptance area that occurred from back then, from November through January or so, and the key level in this area is 2060.50, and that's where we are. The overnight low happens to be this MCLVN area, and the market stabilizing in this prong. So if the expectation this morning is that we would have responsive buying towards Friday's low. So I'm looking for the overnight inventory to be way out of balance today. If we look at where we are versus where we were yesterday in this balance, we're very much below. 75 versus 61, we're 14 points lower. I'm expecting responsive buying towards 65.50. I expect a fight at 65.50. If not, then 69.25. But overall, any buying is going to be met with selling, in my opinion. From my part, I'm going to be stalking short against these key areas: 65.50, 69.25, and then of course the 70 to 72 area. I'm not going to step in short blindly. The idea here is not that you would you would just stick your neck out. The goal is to see how it's trading on the buy side. So if we have an open drive up, then I'm going to step away from this 65.50 and look to see look to get a reaction at 69.25 and up through 70.72. But I'm not going to just step in its way because I feel like the market is likely to go lower. That's not how I trade. The goal is to look at what it has done, to figure out what it's how good of a job one side is doing over another. Right now, the sellers are doing a good job of exploring lower and seeking out buyers to fulfill their trades. And the market's likely to react on the upside on the open. The market's out of balance right now, so that's the key condition, or the key boulder, or the key foundational piece we have this morning that you need to keep in context, is that the market is all of a sudden out of balance, and when it's out of balance, we're likely to get a strong reaction on the open one way or another. Because it is out of balance. Since we had a consensus day yesterday of prices being fair up here between 79.25 and 72.75, with the most fair price at 75.25, and now we're trading at 62.75. Some participants are going to be active on the open, and so we're going to see how that reaction is. We're going to see if it's an open drive. The order of importance, or the order of aggression of the open, goes opening drive, opening test drive, open rejection reverse. Then we have open auction out of range for this kind of location. If it's in the range, then it's open auction in range. Open auction in range and out of range tell us. The open auction in range tells us that nothing has changed. Participants are still comfortable with prices. Prices are stuck in a fair area, so expect chop on the open. Open auction out of range means they're not aggressive on the open, even though they've opened way outside of the prior day's range. But the higher time frame is still standing by and has not been activated. Expect consolidation and a very strong move out of that area later in the session, meaning half hour in, or whatever, not immediate. But if you get an open drive, meaning the market opens and it immediately picks a direction and is trading in that direction, that is a very, very directional move. It is likely to result in a short-term trend, if not a whole day trend. Do not stand in the way of those days, because it is a higher time frame, and other time frame OTF fulfilling an order or a large position, and our pricing in our short-term view on the market, being day traders, our pricing is, or our views and prices and levels don't really matter to folks who trade at that higher time frame. So we stand out of the way. So it's very important. Now I'm expecting, again, responsive buying on the open, and it's very important, very, very, very important to just watch carefully what happens on the open. How are they taking the offer? How are they hitting the bid? Is the bid reloading as it's being hit? Does it keep replenishing? Is there an iceberg there? Or is it lifting the offer, and then is it lifting the offer aggressively, and we see the offer get immediately thin and immediately come up as prices come up? How does the market react? It tells us a lot about who's throwing the bigger punch and which side would likely pay us. And that takes a lot of time to refine that skill and to be able to detect that early on, just watching what's happening. But it is there. The skill can be developed, and it's important to see what happens. Again, the market's out of balance this morning. It is against its 2060 MCV from prior. Below here, if sellers step in early and don't allow it to get up to 65.50, if sellers step in early, we're expecting rotate for this to roll over and get down to 53. That is the next most valuable price in the area, 53. And then we, if you recall, 46, 47 was an area we played with for a long time. And then after that, we have 2040 with the big MC point of control at 2026.75 down here. That is the most valuable price between October, the last day of October, all the way to the last day of February, or actually not the last day, the middle of February. When we switched, we popped out of this range on the 13th of February. So this price here, the 2026.75, is the most balanced or most sought after price in the area if we happen to get through these other high volume nodes. But the order of succession is 2060, 2060, 2053, 2046, 47, and then 2042, 40 before we get to 2026.75. And those are the areas that I'll be looking at. Hypothesis 2 would likely be a quick test down as the market tries to continue to be impulsive down based on the overnight setup, an attempt down, and then I expect that if it does start to push up, then your targets are likely to be 62, 65, 50, 69 quarter, 71, 72 for the balance, for the value low, and then ultimately 75, which puts us approximately 13 points away from where we are, and that's about the range we would get on a buy side. So I know that's a lot of information, but that's why you're tuning in. Looking at crude oil, very interesting yesterday. Crude oil pushes some really nice setups in crude oil yesterday. It opens right at the point of control, open auction in range, breaks higher, and then it just continues to push all the way to the gap, the pit gap close from the 5th of last week. Takes the pit gap close by 2 ticks and then rotates back to the mid and then stays in the developing value and then continues to trade sideways. This morning it's gapped lower and it's pushing lower. Again, the US dollar is stronger and it's causing a lot of these US dollar price commodities to react. But overall, it looked like crude was ready to make its rotation back up and complete that W shape it formed way back that kind of failed here. This W-based profile, 1, 2, 3 prongs, and it just pushed lower. Up top, targets in crude oil 52.83. We have an open point of control and 54.30 gap. But overall, the most important price in the area is this 51.84, 51.85 area, the point of control. The market, this market is basically stuck in balance in a wide range, in about a $7 range. So, you know, be careful. It's trading both ways. Euro stocks also reacting, pushing lower. I talked about yesterday looking for this this 36.18 to be tested. Went to 36.19, pulled back 22, and then sold off into the close. And today it's trending lower, and it's back into value, into this balance. So now we can take this balance and extend it back, to see what the big picture is as far as what areas it's likely to trade. It looks like it's pushed through this MCLVN. Very ugly profile, to be honest with you. It's not very clear, but you can see it's rolling over itself. So this market's back in balance, and it's at that price we've talked about before, the 35.54, 35.53 area, the low 35.51. Where do we get the price? It's that naked point of control, and it used to be in a CHVN in this area and was a target from below. Anyway, That's 20 minutes of talking. I'm over my time. Good luck today. Watch your risk as always. Don't forget, there's a webinar this afternoon. If you're in the U.S., if you're U.S. based and pay U.S. taxes, this may be a useful one for you to watch. We have a CPA coming in to talk about trader tax strategies and what you need to know as a professional trader trading the markets. So that starts at 3:30 Central, 4:30 Eastern. I've tweeted out the link on Twitter. Look for that. Take care.